Right, let's have a look at trading futures, shall we? Every day the same thing happens when the futures markets open. The price either shoots up or it shoots down. We just need to know exactly when this is going to happen and for how long for. Now this can only be achieved with lots and lots of practice until you literally start using intuition. Strict discipline must also be initiated, and a cool, calm and collected head must be engaged at all times, because trading futures is a bumpy ride. So if you're new to the futures market, what exactly is it? Well, the definition is quite unnecessarily confusing, saying that the futures markets trade contracts in commodities, currencies or stocks, and those contracts are an agreement that something will be bought or sold for a specific price on a specific day in the future. Well, that might all be true, but all we need to understand about it as day traders and scalpers is this. Index futures, such as the Dow Jones and the FTSE 100, can be opened up in your broker, and you can trade the price fluctuations just like you would with a normal stock. Unlike a singular stock, an index tracks the price of a group of stocks. For example, the price of the FTSE 100 index is based on the price of 100 of the largest public companies that trade on the London Stock Exchange. So as these individual 100 companies' share prices fluctuate, so will the price of the FTSE. Now, to trade index futures, you can use CFDs, spread betting or options. I have only ever used CFDs and don't know anything about spread betting or options, so I can't help you there. But you can easily open up a broker account in demo mode and practice trading futures using CFDs. This will allow you to use leverage, enabling you to put a lot more money down on the table in order to have a better chance at actually making some decent money. Now, there are high risks involved when using high leverage, so only do it in demo mode and practice and get your risk management in order. If you're in the UK, you can use City Index or IG as trusted and reliable brokers for CFD trading. I do know that you won't pay any tax on spread betting, but you do have to pay tax with CFDs, but you can offset any losses against potential profits. Now, futures markets have official opening and closing times, but are in fact open after hours for pretty much the whole week, so you can trade them most of the time if you wish. But as a scalper or a day trader, you'll only really want to trade during official market hours when there is more volume, and especially at the market open when there is the most volume. One of the things I like the most about trading index futures is that you don't actually pay any additional commission fees like you do with stocks. The broker just takes their cut from the spread. Now, the spread will be slightly higher before market opens, so if you want to trade pre-market before the official market open, then you will pay slightly more for it. Now, my rule of thumb when it comes to taking daily profit and loss target is to aim for 2% of my trading capital each day. And right now, my demo account has around £5,000 in it. So I'm aiming to take 1% when I trade the FTSE and 1% when I trade the Dow, which is around £50 per trade and £100 per day, which is 2% of my 5k trading capital. Now, depending on your broker, these indices will have different names. So the FTSE 100 on my broker is called UK 100, and the Dow Jones is called Wall Street. So make sure you find the right name for the index that you want to trade with your broker. So let's have a look at a couple of trades I made this week on the FTSE and the Dow. I had to do all these on my phone as I was away from my laptop, so sorry for the small screen. This first trade is Monday morning 8 AM on the FTSE 100 market open, and the very first thing I'm going to do is have a quick glance over the graph for the past 24 hours or so. We can see that the price has been dancing around the 7,000 mark and has been selling off continually for the past 5 hours in the pre-market. Now, due to this sell-off, we might think that when the market opens, people will buy in because the price is cheap, causing the price to recover. Well, yeah, that might be the case, but it doesn't always necessarily play out like that. It might continue to sell off, who knows? What I like to do is just keep that at the back of my mind and not let it bias my decision. Now, the market has opened and you can see right away the price starts going nuts as orders made earlier are now being filled. There's been a big drop in the price, but that doesn't necessarily mean that's going to continue that way at this stage, so you need to have a bit of patience here. I want to wait for this to calm down slightly, as this isn't a true reflection of exactly where the market is going. I'm not going to wait long though, as usually the second or third candle on the 1 minute time frame is where the big price moves start to occur. Now look across to the previous big spike. If the current candle breaks above that, it's usually a good indication that the price is going to go up and we can enter a long position. And you can see it's testing it. It's got good upward momentum. It's holding that green candle and it's not running out of steam yet. So this is looking like a good entry for a long position, but I'll just wait a little longer just in case it decides to drop back down now that it's hit the resistance level. We can see it's just testing that resistance level there, and to me it's still looking strong, like it wants to break through, and it has, so that's where I take my entry. And immediately it's followed by a big red candle. This often happens as soon as you make a trade. It will immediately just do the complete opposite, which is infuriating, and it's as if it knows somehow. But it's not looking bad here. If the red candle drops down past the previous green candle, then it might be a good idea to cut the trade and take a loss. But it's looking strong. Look at that big wick on the red candle there. That means that the buyers are pushing the price up and overwhelming the sellers. So I'm still feeling good about this entry. It's still testing that resistance level, and now it's broken through, smashing through the 7,000 mark. Now my target here is around £50, which is 1% of my trading capital, and it just touched £48 there, and I didn't take it in time. And of course now it's dropped again, so we'll see if it has run out of steam and if it's going to continue to come back down now. Now this is the classic market open. The price shoots up and then it has to come back down again. And I think I may have missed my opportunity to bank the profit before the price dropped. Now we have two red candles here. If the second one comes down any further, it might be time to admit defeat. But let's keep an eye on it. So there's some consolidation going on, where the chart just moves sideways and there's no clear direction in price. So we wait for it to break out of this consolidation phase. And if it breaks out against us, I should cut the trade immediately, as it will likely continue to drop quite a bit. But if it breaks out in our favor, then this could be the move that we've been waiting for. And here it goes. After a big spike up like that, there's always a little pullback as people take their profits. So just wait for that little red candle to pass. Now the resistance level is going to be tested again, so I'm going to bank my profits quick and take my 1%. And there, close the trade, cashing in £54, slightly over my 1%. Probably wasn't the best timed entry, as the price immediately went against me, but with the practice and exposure that I've gained over the past few months, I felt pretty confident that the price would prevail, based on the behaviour of the price action. Now, after many hours in the market, you start to get a feel for price action and how the chart behaves. But of course, it doesn't always go the way you think it will. So don't get overconfident if you bag a few wins, because the market will come back to bite you. And if we go back and have a look at the chart 10 minutes later, you can see that I took my profit just in the nick of time as the price changed direction and dropped back down again. So you can see that at 8 AM the price shot up and fell, then consolidated for a few minutes, then shot up again and fell. Sometimes the opposite will happen, where the price will shoot down and then recover, and shoot down again and then recover. This is just what happens most days, and so if you practice every day, you will start to notice similar patterns and behaviours. But it does take time, so put the work in and just be patient. Now this next trade is on the same day at 2:30 PM for the open of the Dow Jones. And again, straight away, I'm going to have a quick look at what happened in the pre-market. And we can see there was a big sell-off at around 9 AM. And since then it has rallied very strongly. And in the last hour, there has been another sell-off and rally. Now at an all-time high price, so in my head I'm thinking, this has now got some space to fall back down. Or it could be an indication that the momentum is good, and if that momentum holds at market open, the price could continue to shoot up. But of course, I'm not going to bias my decision with that. Just keep it in the back of your mind. Now the market has opened, and as usual, the price goes nuts and shoots up. Now it's usually a good idea to not rush in at this stage, but the upward momentum is feeling strong, and we've had such a strong recovery since 9 AM this morning, so this is looking like a good long position. But I have to be quick, because this could drop any second as people start to take their profits. That's about my 1%, so I'll close it there and bank £43, so just under my 1%. But you put it together with this morning's winnings of £54 on the FTSE, and that's a total of £97, which is pretty much my 2%. And that's what I aim for each day. Now let's go back to the Dow Jones chart a few minutes later and see what happened. Again, you can see if I'd held on any longer, I would have lost as the price peaked and fell back down again. I believe later on it actually continued to rally up, but I got my 1%, and whatever happens after that, it's not my business. You aim for your target and you walk away. It doesn't matter what could have happened afterwards. You come, you take, you go, and you do it again tomorrow. So there's a couple of trades I did this week on the FTSE and the Dow Jones. Now, of course, it doesn't always play out quite so perfectly, and you will lose some days. But if you can win more times than you lose, then you will always be in profit. And you win more than you lose if you have a strategy that works for the majority of the time. Now, this strategy plays on the day-to-day price patterns at a particular time each day, which you can start to get used to, and by law of averages take advantage of. And of course, if you cut your losing trades sooner rather than later, you will be able to recover much quicker than if you take huge losses. It all comes down to practice and discipline, so have a go for yourself. This is just how I do it. It might not be the best, but it's working pretty well for me. And if you want to have a go at it like this, then just do it in a demo account, and remember to keep going and don't give up if you keep losing, because the more you lose, the more you will learn, and you'll eventually develop those skills. So I hope you enjoyed that. Remember to do some research into what the futures markets are and how they work, as I literally just skimmed the surface on this. But keep practicing, stay patient, and I'll see you next time.